This is probably the most confusing part about the 401k, and it's actually really annoying that they have this. If you watch my video from 2 months ago, I wrote a letter to the senator here in Nevada. I didn't hear back. No surprises there. But I wrote in that letter that there are a lot of things that are just way too complicated, even for financial professionals to go in there and like, why does this rule exist, right? Why is there a after-tax 401k inside a Roth 401k when those two things are pretty much the same thing, but they have them categorized completely differently from, like, you understand the traditional 401k and then there's the Roth 401k. But there's also a thing called the after-tax 401k that not many people are aware of. And this is where the confusion comes in, okay? So you have a traditional 401k, okay? And then here's the Roth 401k. And then there's a third bucket. It's called an after-tax 401k, all right? You're like, wait a minute, this is all I have seen. I have seen traditional 401k and I have seen Roth 401k. So traditional 401k will be in pre-tax contribution. So you don't pay taxes now, but you will pay taxes later. So that is in pre-tax, right? So I'm going to write that down. So that is pre-tax. And then Roth 401k, you pay taxes now, so you don't pay taxes later when you're retired. But there's an extra bucket. It's called after tax. That's also the same thing as the Roth 401k. Here's the weird thing, right? So there's the maximum limit is 23,500 as an employee. But there's an after-tax 401k limit at 46,500. So the maximum 401k contribution, despite what you hear about this 23,500, it's actually $70,000 in the year 2025. So if you get that employer match, let's say you max out 23,500 every year, and you got the employer match of, let's say, 10,000, that 10,000 comes out of here at 46,500. So now you have 36,500 remaining that your employer can contribute to, right? But if you work in a big tech company, you might be just getting that $70,000 every year if you're making like over $300,000 a year. But most people would get like, say, 5% employer contribution or 10%. That would be awesome. But most of them are between 5% and 6%. Okay. Now there's an extra function, what's called after-tax 401k. Let's say your employer contributes $10,000. Okay. That's your employer match. And you're maxing out 23,500 into, let's say, I don't know, it doesn't matter, traditional or Roth 401k. You got that 10,000 coming in. You have 36,500 remaining, okay? That 36,500 is what you can actually contribute as an after-tax 401k. That's the third bucket. If you log into your 401k, if this bucket exists, that means that your employer and your 401k plan allows you to contribute in after-tax bucket. Now, how does this work? So you already pay taxes on this, okay? Let's assume that you're gonna put another 10K into the after-tax bucket. Now you have 23.5, you have 10K from an employer, and then you're putting extra 10K in after-tax 401k. If you leave it in the after-tax bucket, you don't wanna do that because this is going to grow tax deferred. I don't want that, okay? We don't want the tax deferred growth because the 10K, let's say we have a really good market return this year, and now your 10K became 10.2K. That $2,000 you're gonna owe taxes on when you take money out of the 401k. So what you can do to avoid that $2,000 to become tax deferred before this even happens, what you want to do is do what's called an in-plan Roth conversion. And that name is very, very deceptive because Roth conversion, when you hear those words, it sounds like you got to pay taxes, right? But no, you do not, because you're just doing a 10K, switch colors here. You're just putting the 10K over to Roth 401k. It's called an in-plan Roth conversion. You're putting the after-tax money of 10K over to the Roth 401k. Now, does this count towards your 401k contribution limit of 23.5? It does not. It's actually in addition to it. So if you max out your 23,500 in your Roth 401k this year, you have $10,000 coming out of after-tax 401k. You can do the in-plan Roth conversion and move it into your Roth 401k. Okay. Why do we want to do this? The reason is simple. Instead of doing this stupid tax deferred thing, Now this thing, the 10,000 moving it into a Roth 401k, this is gonna grow tax-free. Which one would you rather have? Tax-deferred growth or tax-free growth? I always pick tax-free growth, okay? Now you're like, my plan doesn't come with the in-plan Roth conversion. It doesn't let me, but there's a thing called an in-service withdrawal to the Roth IRA. Does that work for me? Yes. So there's another way to do this. And let's say your 401k plan doesn't allow you to put it in the Roth 401k, but it lets you put that 10K over to the Roth IRA. Roth IRA, okay? Pretty awesome, right? So now you can move that to a Roth IRA. It's also known as the in-service withdrawal to a Roth IRA because that 10K you already pay taxes on, okay? Again, if you leave it in there, even just for a day, anything that grows out of that 10K is tax deferred. You don't want this tax deferred, right? If you put it in the Roth IRA, it's also gonna grow, guess what? Tax free. Pretty cool, right? So it grows tax free. So which option is better? Roth 401k or Roth IRA? This is my personal experience and you can do whatever you want. It kind of depends on your plan too, if it's available. When I had a Vanguard 401k with the private sector, I always did the in-service withdrawal. The reason is the plan is cheaper. My 401k plan was not cheap. It was about 0.8% if I remember correctly. So instead of putting that 10K into the Roth 401k, I put it in the Roth IRA where there's no management expenses. All I did was just put that into the index fund. Now, you may be asking, hey, does this count towards my $7,000 in Roth IRA contribution limit? The answer is no, it does not count towards the $7,000 contribution limit. Because remember, this thing, 10K going into the Roth IRA, that's called a rollover, okay? So the rollover does not count towards the contribution to the Roth IRA. So remember that. You can put, let's say you're big time and you want to go 36,500 all into the after-tax contribution. You can put 36,500 into the Roth IRA. Remember, in-service withdrawal, also called the rollover, does not count towards $7,000. I did this for about 3 years. If you watch my previous videos, that I did it for 3 years straight. Like I absolutely maxed out my 401k contributions and I put it into my Roth IRA. My Roth IRA just blew up. It was awesome. And when I left that job, I stopped doing it. I stopped doing it in 2020 because I felt like I had too much in my retirement, right? But just keep that in mind when you do this, that there are 3 accounts, okay? I'm gonna go through this again. You have traditional 401k, Roth 401k, after-tax 401k, and then you may have the employer match. Remember, if you get a pay raise in the middle of the year, let's say your employer match goes from 10K to 12K, you got that $2,000 pay increase in the employer match. You need to subtract that $2,000 from the after-tax 401k. Otherwise, you're gonna miss out on employer match. Is the #1 priority. Why? It's free money, duh, right? So you don't want to miss out that free money. You need to pay very, very close attention to the after-tax 401k because you have to manually calculate this. In my private client program, you can go to firesightshare.com/pricing and there's the private client pricing. We do keep track of the after-tax contribution like this. So it's pretty neat. Like, obviously this is the in-plan Roth conversion of it. So if you do 23.5, 7,500, let's say I max out to 23.5, right? And let's say I do $10,000 a year, okay? You see how it quickly moves up, all right? So if I max out this Roth 401k, and this is starting with 67,000 here. So by here, you're gonna have like 1 million, right? What age is that? Let me see. That is age 44. Well, that's assuming that you're starting at 30. So let me bring the age up. Let's say you're doing 40, okay? Anything highlighted in blue, that's 55. Again, this is only available for my course members and private clients, but just putting it into that after-tax contribution, let's say you do 10,000 here, 15,000 here, and 20,000 here, okay? Look how the big difference it makes. Do you see that? I'm gonna go and erase it. You can take a look at it. It went from 1.2 million, okay, to almost 1.4 million if you do it now. And that's why I did it. When I did it, it was like a very quick decision and say, whoa, let me sacrifice a little bit instead of putting it into my taxable brokerage. I'm gonna beef up my Roth IRA in-service withdrawal and the after-tax contribution to the 401k. Because when I paid off my debt of $110,000, I was so behind on my retirement savings. You probably feel like that too. You're like looking at your 401k, you're like, man, I am so behind right now, right? Because you just paid off your debt, or you've been contributing only maybe 5%, 10%. You can always just do the after-tax contribution if you're earning a very high income. You're maxing out. The number one priority is maxing out your employee contributions. If you already did that and you get your employer match, and then you want to do the after tax, okay? Make sure to set that up. If it doesn't come with the in-plan Roth conversion, okay? If it doesn't come with the in-service withdrawal to the Roth IRA, I wouldn't personally do it, but you still can. There's nothing wrong with doing it, right? You just got to remember that putting $10,000, that example that I gave you, it's going to cost you, right? It's tax deferred. So that earnings and dividends and capital gains, you will owe taxes on that unless you roll that over to the Roth 401k or Roth IRA.